In a poll of new investors, over half reported making more than 25% on their investments just in the last year, and 2 in 10 had made 50% return or more. If your money is not working for you, you are losing money. In this video, I'll give you a complete guide for how to invest your money along with the 4 best investments for new investors and reveal the 3 biggest mistakes that lose your money. We're talking how to invest today on Let's Talk Money. Hey Bowtie Nation, Joseph Hogue here with the Let's Talk Money channel, and I gotta send a special shout out to all you out there in the nation. Thank you for spending a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. Nation, I guess Warren Buffett just put it best with, if you don't find a way to make money while you sleep, you will work until you die. A little harsh maybe, but the Oracle of Omaha is just trying a little tough love. Though it's hard to imagine this guy being tough on anyone. But the truth is, there has never been a better time to start investing and making your money work for you. In that poll in our private Facebook group, more than 200 new investors, people just starting to invest in the last year, shared their investment returns, and I was blown away by the results. More than 87%, nearly 9 in 10 new investors had made money. More though, the returns were extremely high. 3 in 10 had made between 25 to 50% on their money, and almost 2 in 10 investors had made a return of more than 50% or even doubled their money. So in this video, I want to take us back to the basics. Make sure you have that core foundation to get started investing. We'll start with the types of investments and average returns you can expect on each. Then I'm going to drill down to show you how to start investing in stocks and then share the best investments for beginners. Stick around though, because towards the end of the video, I'm also going to reveal the 3 biggest investing mistakes beginners make that lose your money. The video is part of a new 4-part series in partnership with The Motley Fool to help you get started investing. I'll be putting all 4 videos into a special playlist on the channel called Ultimate Guide to Start Investing. And as a bonus, I'm going to help you get started investing with a free report, the top 5 stocks in my portfolio. These are the 5 biggest stock positions I'm holding right now, stocks to benefit from some of the biggest trends over the next decade. This is an exclusive report only available through the link that I'll leave in the video description below. I won't be sharing any of these in a video, so click through and get your free report. Now I know you want to get to the good stuff and how stocks work and those best investments for your portfolio, but let's set the stage first with the types of investments you can buy. We'll look at the returns on 4 asset classes and how to use each to invest your money. First up, stocks are an ownership of a company and all the future cash flows that stock is going to pay out. It's higher risk because if there's no cash flows, you might not get a return at all, but it's also the single best investment you can make. Bonds, on the other hand, are a loan to the company. The company sets a fixed interest rate and then pays that out twice a year on the bond. And at the end of the loan, the company pays back that money. So you're going to be collecting those regular interest payments, then get the value of that loan back at the end. It's less risk than that stock because the companies have to repay their loans before stockholders get a dime, but it's also going to be less return. Real estate is where I started my professional career, and it's not just spending all your money on some infomercial get-rich-quick schemes. Anyone can invest in property through real estate investment trusts or REITs, companies that own and operate real estate and then pay out that cash flow to investors. These REITs trade just like stocks, so it's easy to buy or sell and get that exposure to property. Now last year, before we look at those investment returns, is gold, those shiny little nuggets that have been giving people the fever for millennia. Now gold is a store of value and a safety investment in times of uncertainty. It might not be a great source of returns, but it does have its years. Here's a chart of the returns for each investment type each year going all the way back to 1985. This actually breaks some of these into groups within each, like large company and small company stocks, US bonds and international. And now just quickly looking at this chart doesn't tell you much more than looking at a Jackson Pollock painting. But there's actually a really important idea here. Each of these investment types has some good years and some bad. Stocks of large US companies have averaged 8.7% annually over the last 35 years, but have ranged from a gain of 34% to a loss of 37% in individual years. Stocks of companies in emerging markets have plunged 52% in 2008, only to boom higher 71% the following year. REITs, those real estate companies, have produced a 7.3% annual return, and then US bonds have averaged 4% over those years. Gold, for its part, has also posted a return, but only 2.3% over that period. So a good investing plan isn't necessarily just going after the investment with the highest return one year, or even the one with the highest long-term return. Now, stocks have produced that 8.7% annualized return, but those big crashes sent investors into a panic, selling at the worst possible time and locking in those losses. So when we get to those best investments for beginners, I'm going to show you how to use this for that motivation to keep investing and not freak out in a crash. And we're going to shift now into how to invest in stocks, but I want to get your input on this. So let me know in the comments below if you want to hear about any of these other types of investments in future videos. Before we get to those best investments for beginners and those 3 mistakes to avoid, I want to share some resources here for learning about stocks. Books like The Intelligent Investor by Benjamin Graham and One Up on Wall Street by Peter Lynch are great places to start, though I know a lot of investors want those bite-sized chunks to learning rather than reading an entire book. Some of my favorite channels here on YouTube are also great resources to learn about investing, including Stock Mo, which is a great channel for investing in growth stocks. Mo covers all the fast-moving stocks like NEO, Tesla, and the ARK funds. I like how he shares his investment portfolio and gives you daily updates on the stocks he's watching. Mo has the heart of a teacher, and it shows on how fast his channel is growing. Another great channel here is Jimmy's over at Learn to Invest, and this one is much more the fundamental analysis for stocks, building a portfolio, and understanding how to create that investing plan. Jimmy does a great job of showing you exactly what he's looking at in the numbers for each company with charts and tables. And here, Griffin Milks does a great job with dividend investing as well as that general investing knowledge and is a great resource for you Canadian investors. Griffin has a great conversational style to explain everything from investor mindset to other topics like personal finance and just making more money. Another one of the resources I use for stocks is the Motley Fool's Stock Advisor, a monthly recommendations newsletter that has outperformed the market for more than 18 years, with the average stock recommendation up nearly 600% in that period. Now, that report on my 5 biggest stock positions that I'll link to below is absolutely free with no obligations. But if you're looking for resources to learn about stocks, it's hard to go wrong with the Motley Fool. Before I share those 3 new investor mistakes, I want to reveal 4 best investments for beginners, 4 stocks and funds to consider for your first portfolio. And the idea here, how I picked these as really the best investments to get started, is going to be around 2 reasons. Now, first is just to build a well-rounded portfolio that won't crap out when one stock or one theme crashes, but also, and this strategy you're not going to hear from any other channel because it's not part of that conventional wisdom, but we want enough growth and cash flow investments to keep you motivated to invest. And what I'm talking about here is having some high-risk, high-return stocks that can really grow your portfolio fast, as well as some consistent dividend payers for that cash flow. Now that way, whenever you look at your portfolio, you are consistently going to be getting that encouragement, that motivation to keep investing because you're going to see your portfolio value increase or you're going to be receiving that dividend in your account. So the best investments for beginners are the ones that keep you investing. And I've got 2 stocks and 2 funds that are going to do exactly that. For dividends, we'll start with Stag Industrial, ticker STAG, a real estate company with 450 industrial properties in 38 states and 91 million rentable square feet that pays a monthly dividend of 4%. Nation, the rise in e-commerce and online shopping has destroyed the retail property market. But all those online orders need to be stored somewhere, and that's meant a boom in warehouse demand. In fact, 43% of Stag's property portfolio is involved in that e-commerce activity. Next here, we've got one of the most popular monthly dividend funds, the Global X NASDAQ Covered Call ETF, ticker QYLD. Now, the QYLD holds the tech stocks in the NASDAQ 100 index and then sells call options against them to generate an amazing 11.3% dividend yield. It's paid monthly distributions regularly for more than 6 years and has produced a 32% return just over the last year. This fund invests in large, stable tech companies like Apple, Microsoft, and Amazon for that upside potential, and then uses that option strategy for the cash flow. Holding that fund and the dividend stock means you're never going to be more than a few weeks away from seeing a dividend check pop into your account, making sure that you've always got something to look forward to when you check in on your investments. Now, for our growth stock and fund, we'll start with one of my favorite long-term growth stories and Fastly Inc., ticker FSLY. Fastly operates a cloud platform for content delivery, which is just a fancy way of saying it helps websites and the internet get to you faster. It also provides streaming and video services, which puts it right in the middle of the biggest trends right now and a $35 billion market opportunity. I first recommended Fastly in November 2019, and you can see that the stock bounces around quite a bit, but even on that recent sell-off, it's up 222% in the last year alone. It's found support around $65 a share, and I like it at least back up to that $125 a share price target, and even further on that long-term growth story. Now, for our growth fund, it's hard to argue with the performance in the ARK Innovation Fund, ticker ARKK, the flagship fund of Kathy Wood and her team over at ARK Invest. The fund invests in 30 to 50 of the leading companies in disruptive technology, companies changing our lives in fintech, artificial intelligence, and the genomic revolution. Just looking at the top 10 holdings here, and you see the fund gives you instant exposure into some of the hottest growth stocks, including Tesla, Square, and Zoom. Now, I'm not going to guarantee you that the prices for this fund or Fastly are going to go up, but these are strong growth picks and with exposure into some of the fastest growing themes. Now, these two investments are going to give you that reason to check in on your investments just to see how much your portfolio has grown. And I'm going to leave a link to that free report to get other great investment ideas in the description below the video, so make sure you check that out. Now you've got those basics and those 4 best investments for beginners to get you started, but nation, sometimes not losing money is just as important as making money on your investments, and beginner investors are notorious about losing money. Here are the 3 biggest investing mistakes to avoid to protect your hard-earned portfolio. First is just chasing a stock all the way down to the bottom. This is where a stock you own starts dropping and you keep buying. Now, there is an idea called dollar cost averaging, where if you buy more shares at that new lower price, then your average cost on the stock is going to be lower. Say you buy 5 shares at $20 each for a total of $100. Then the share price falls 25% to $15 each. If you buy another 5 shares here, your total investment is then going to be $175, and you have 10 shares for an average price of $17.50 each. Now you only need the stock to go up 16% to break even and start making a profit. And there is nothing wrong with dollar cost averaging. In fact, I do it myself on my stocks on the way up and on the way down, just buying a little more every few months, whether the share price is higher or lower. I'm building a position over time in my favorite stocks. The problem here is when you keep following that stock down, putting more and more of your money into it. Now, in that example, what if the stock falls again to $12 a share, and then $10 and $7 each, and each time you buy more shares? Pretty soon here, you could have 20 or 30% of your portfolio in this one stock, and a huge loss. It's just keeping you up at night, and you're praying to every god under the sun for a rebound. And the stock may never recover. Even if the company avoids bankruptcy and totally wiping out investors, it might be dead money for decades. Shares of BlackBerry have lost 92% since that 2008 peak and just never recovered versus the broader market that has produced a 200% return over that period. So it's okay to buy more of a stock you really like, but limit your investments in any single company to no more than 10% of your portfolio. Now that's going to give you that chance to dollar cost average lower, but won't risk wiping out your entire portfolio on a single bad stock. Next here, and this is one made by experienced investors just as well as beginners, but selling your winning stocks too early and holding on to those losers. Now, this is actually one of the biggest tricks your mind plays on you, and it's called loss aversion. This is where instinctively we fear losing so much that we avoid selling our losing stocks, because when you sell a stock, that means you're going to lock in that loss. So what happens here is investors are quick to book their profits on winning stocks, selling after a 20 or a 30% gain, but then they ride those losers all the way to the bottom, and even buying more with that dollar cost averaging. Essentially, they're reducing risk in their winning investments while they're increasing the risk in those losers. In fact, what you should be doing is the exact opposite. Don't be afraid to dump those losing stocks quick, especially if it means you can use some of that money to double down on those best investments. Reduce your risk in the losers, maybe after they've fallen 10% or so, and add that money to your winners all the way up. Another huge beginner investing mistake here, and this one has to be the worst over the last year, is just having all your money in one hot investment. Nation, I get it. You see all those runaway investments like Bitcoin and Tesla here up 400% and 600% over the last year, or GameStop up a massive 3,000%. You look at these and you want to be rich. And it is okay to go after these kinds of high risk, high return investments, but you also need a portfolio of other stocks just to make sure you're in the right one, the one that is going to make you rich, as well as a few others that are going to produce that stress-free return. Having all your money in just one or two of these lottery ticket investments is setting yourself up for disappointment, frustration, and really to lose your money. Follow those basics on how to invest your money that we've started in this video. Follow the rest of the videos in this series, and you will make money. You will reach your goals. Don't forget to get your free report and see the top 5 stocks in my portfolio. Click on the video to the right for the 7 monthly dividend stocks to pay your rent. 7 stocks to make $2,000 a month. Join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.